Good morning, students. How are you all? Hope you all are fine at home after this storm, isn't it? Very severe storm day before yesterday. Okay, hope you all are fine. Okay, I am also fine, students. Today shall we learn the next part. That means this is the one that we had in the last year's portion. Okay. Till now what we have studied is the omitted portion, deleted portion. Now from today onwards what I am teaching was the portion of last year. Okay. So if they give the same portion it will be very useful for you. So please listen to me carefully. Okay. So preparation of final accounts from the incomplete records. So incomplete records means we do not have all the proper records to prepare the final accounts, isn't it? We need that we know first what are the final accounts. Final accounts, the first one is trading and profit and loss account, isn't it? Trading and profit and loss account. For this account what we need? We need that expenses and revenues, income, isn't it? Or income we can say, expense and income we need. Okay, then for the balance sheet, next to final account is the balance sheet. Here we need the assets and liabilities. So here we may have everything incomplete. Everything detailing fully we may not have. So the expense, some of the expenses may be missing, or some revenue, or some of the asset liability, some will be missing. So we can find out that one first. Okay, so the missing figure. So okay, the relevant data may not be available, the full details. So with the available information, with the available data, we can calculate the missing figures. Okay, we can find out the missing figures by preparing some accounts. Okay, so we can say as the steps. Okay, steps to calculate the missing figures. What is the first step? We have to prepare the statement of affairs. We know already this one, isn't it? Last year itself we have learned statement of affairs, opening. From the statement of affairs we calculate the opening capital or closing capital. Okay, usually here they will ask us to calculate the opening capital. That statement of affairs will be given. So we can calculate the opening capital. Then cash book can be prepared. Here by preparing the cash book we can calculate the cash sales or cash purchases. Okay, how much is the cash sales or how much is the cash purchases from the cash book. Okay, then some other accounts also we have to prepare. Okay, that one third step. Maybe the total debtors account and total creditors account we have to prepare. Total debtors account and total creditors account. From this one we can calculate either the credit sales. How much is the credit sale? From the cash book we will calculate the cash sales. Here the credit sales. Here from the total creditors account we can calculate the credit purchases. Okay. This is what included in our portion. Okay. We need to calculate the credit sales. The first one we have done to calculate the opening capital. Already we know how to prepare and find out the opening capital from the statement of affairs. Okay, here credit sales, or they will ask us to calculate the closing debtors, the balance set end. Okay, they may give the credit sales and opening balance or some other items. We will calculate the closing balance of the debtors or credit sale. Usually, mostly we will calculate the credit sales from the total debtors account. In the same way, mainly they will ask us to calculate the credit purchases, sometimes the closing balance of the creditors account. Here also closing balance of the debtors account. Okay. Then one more, bills receivable account. It is also related. Okay. Bills receivable account and bills payable account. Here they will ask us to calculate how many that bills that we have received, bills received during the year. Okay, or bills receivable received. Here bills payable accepted. Bills accepted. That means we need to pay these bills. Here we will receive the amount of those bills. Okay, so from this account, bills receivable account and bills payable account, they will ask us to calculate the bills accepted from the bills payable account, the bills received from the bills receivable account. Okay, or maybe the closing balance of bills receivable or bills payable. Okay, usually they will ask this one only. Okay, here I will tell you one more thing. Sometimes they will give the details of debtors and bills receivable. First we should prepare this one. Second only we have to prepare the total debtors account. Okay, in the same way that there are some problems. Okay, both the details if they give, first we should prepare the bills payable account. Second we should prepare the total creditors account. Okay, because one of the items will be entered from here in this account. Okay, from here we will enter in this account. Then the final step is to prepare the final accounts. Final accounts means the trading and profit and loss account and balance sheet. Okay, so we can prepare the final accounts. That was the this one, preparation of final accounts from incomplete records. Okay, this introduction we have seen. Here now we will see. Here I have told you that cash book they never ask us. They will give the cash sales or credit sales. We are asked to prepare this account, total debtors account, bills receivable, total creditors, bills payable. Okay, now we will see the total debtors account. Okay, total debtors account. You have to use 2 pages. Okay, total debtors account. In order to show you, I am using only 1 page. Okay, but you have to use 2 page. Okay, here creditor, here debtor, then 2 amount column. Okay, here 1. Okay, first what we have to write? We have to write the balance. To balance brought down. This will be given. Okay, so we will write balance brought down. Then one trick I will tell you. Here if it is in this side opening balance, then many adjustment items will appear on the opposite side. Okay, so I will tell you what are the adjustments. Here sometimes we will receive cash from the debtors. So what is the entry? If you say the entry also, it will be posted correctly. Journal entry, cash account debtor to debtors account. So you see in the debtors account, credit side we write by cash. Okay, for the cash received. Then if we receive check and if we deposit that one in the bank, that is called bank, that journal entry is bank account debtor to total debtors account. Okay. Okay, if we receive cash account debtor to debtors account, then when we receive check and we deposit in the bank account debtor to debtors account. Okay, now you see all the adjustments come this side. Okay, now when we receive cash, If we have allowed discount, then that also. When we receive cash and we have given discount for them, what is the entry? Cash account debtor. Since it is a loss, this also we will debit, isn't it? Cash account debtor, discount allowed account debtor to debtors account. So the discount allowed. Okay, then if we have any sales returns debited, debtors account credited. So that also will be written on the credit side of the debtors account by sales returns account. Okay, you have understood now? Okay, then if there is any bad debt, the adjusting entry. Last year we also learnt the 12th, 13th lesson that bad debts account debtor to debtors account. So by bad debts account. Okay, that we will write the amount. Now, sometimes we will receive the bills receivable. Okay, I told you that when we do both the figures, first that bills receivable account, then only total debtors account. So, from there also we need to enter one. Okay, that balance. So, that one. Bills receivable account debtor to debtors account. So by bills receivable. There we will write in the bills receivable account debtor to debtors account. Okay. So here in the debtors account bills receivable will be credited. So when we receive the bills. Now you see for here, when we receive the check and when we are depositing that inside the bank, isn't it? Sometimes this check will be dishonored. Again, so we have to debit the debtors account, credit the bank account. There you have to write check dishonored. Okay, that we have to write. Then sometime this bills receivable that we are not able to receive. Okay, if that is dishonored, what we have to do? The reverse entry. Okay, here we have to write to bills receivable. Bills receivable dishonored. Okay, only this dishonor we will be writing on the debit side. Okay, this one, bills receivable and bank. This only may dishonor. All the other adjustments will be there only. Okay, so now the last one. Here we have to write either this one, balance carry down, maybe the balancing figure, or if they have given this one, we should find out the total and we should find out the balance will be the credit sales to sales account. We have to write credit, then balancing figure. Either this one will be the balancing figure or this will be the balancing figure. Okay. Okay students, only this many are there. Okay. So if you understand this one, it will be very easy for you to do. They never give all these items. Okay. Very little they may give. Okay. Maybe 1, 2, 3. Usually they will give 1 or 2 this one. So you will understand and you can do. Okay. I will show to you the illustration. Okay, then I will do and show 1 or 2 problem, that exercise. Okay students. See this exercise 10. Okay, it's that illustration 10. Debtors opening given, last item closing given, then cash received, discount allowed, sales returns. So total debtors account, first we should write to balance brought down. Okay, opening. Then next one, cash received. So by cash account. Then third one, discount allowed. By discount allowed account. Sales returns. By sales returns account. Then closing by balance carried down. Okay. Then the balancing figure will be to sales account credit. Okay. Shall we do that? Exercise 10. Okay. I will show. Exercise 10, I will show you the problem. Okay. Find out credit sales from the following information. Credit sales means we should calculate total debtors account. Debtors opening given, then last item closing, then cash received, discount allowed, returns inward. Same thing is given, isn't it? So it is very easily we can calculate, but we have to use both the pages. Okay, 2 pages. Two pages. First we should write the question number. Okay, that you cannot see. I am writing on this end. Okay, left side. Question number 10. Then we have to write the heading. Okay, total debtors account. Total debtors account. Total debtors account, then we should draw the line. Okay, amount rupees. Then we will write debtors account to balance brought down. That will be the first item. To balance brought down 1 lakh. The next one, cash received from debtors. So it will be on this side. Okay, by cash account. $2,30,000. Then discount allowed. By discount allowed account. $5,000. Write correctly the digit. Okay. Then returns inward. That also here. Sales returns. That is called sales returns. Okay. Returns inward. 25,000. Then closing. So we should write this side. Opening the debit side, closing credit side. By balance. You should not write what it is given there. Okay, debtors on 31st March 2019. We should not write. Okay. So by balance carried down. Opening brought down, closing carried down. 1,20,000. Now they have asked already, we need to calculate the credit sales. Okay, now credit side only more. So we have to add and write. 30, then 5, 5, 10, balance 1, 4, 6, 8, here 3. So 3,80,000. Then 2, sales. Bracket we should write credit. Then balancing figure. Balancing figure. Okay. Here 1 lakh, so 2,80,000. Okay. So one problem over. Okay. Now sometimes they will ask us to calculate the total sales. They will give the cash sales. Here we are calculating the credit sales. So we need to add one more step here. We have to write total sales is equal to cash sales plus credit sales. We need to add. Okay, that we have to calculate. That also they will ask. That is the next model. Okay, so the 11th illustration I will show to you and I will do it in the notebook. Okay, that is very simple as this one only. Okay, problem. Okay, from the following details find out total sales made during the year. Debtors, opening given, cash received given, returns inward, bad debts, closing debtors, then cash sales. You see how it is done. Okay, same what we have done. Okay, to balance brought down, then credit side by cash account, by returns inward account, by bad debts account, by balance carried down, then total 2,40,000. Here also write 2,40,000. Then with from the opening if we deduct, we will get 1,90,000. Then we got to write like this: total sales is equal to cash sales plus credit sales. Okay, that is the one. Okay, shall we do the next exercise? Okay, 11th exercise. 11th exercise I will show to you. Okay, 11th exercise. Eleventh one, see, opening, then cash received, then sales returns, bad debts, debtors, closing, then cash sales. Shall we do this one? Okay, first I am writing number 11, then total debtors account. Fully you have to write. Okay. Simply I am writing now only rupees. Here rupees. So that one, to balance brought down. How much? 1,30,000. Then cash received by cash. 4,20,000. The next one, sales returns. So by sales returns, 35,000. Then bad debts, by bad debts, 15,000. Closing debtors, so by balance carry down, 2 lakh. Okay, now we will add. By 10, balance 1, 3, 6, 7, 4 plus 2, 6. So write the same amount here, 6,70,000. Then balance 0, 3 plus 4, 7, 5 plus 1, 6. So 5,40,000. We should write this one to sales bracket credit. Then here balancing figure. Now we have to do one more step. Okay, calculating the total sales. For that we can use one page. Total sales is equal to cash sales plus credit sales. What is the cash sales given? 4,60,000. Credit sales we have calculated 5,40,000. Okay, so when we add this one, we will get 10 lakhs, isn't it? 4,60,000, 5,40,000. or you can write rupees. Okay, total sales is equal to. Okay, over now. So you write these two problems in your notebook. Okay students, thank you very much.